Welcome to the Daily Fortune, where we talk about the latest topics about finance and investment. But before that, please don't forget to click the like button, subscribe, and hit the notification bell so you'll know when we upload a new video. Now let's get started. The stock market crash has already begun. We've seen a lot of uncertainty in the market so far this year, with numbers that are not good. All with the Fed planning to make certain moves, the stock market has already begun to respond negatively. And you know what this means, right? You could be losing money every day because of the general fear and hype. But of course, who would want to lose money? Certainly not you. So in this video, we're gonna cover ways on not just how to protect your money, but also how to grow it during the impending market crash. Today, we'll dip into the knowledge of the Oracle of Omaha, hailed as the greatest investor of all time and one of the most successful investors in the world. Let's meet Warren Buffett, and let's discover his recommendations on how we will sail on the uncertain, turbulent waves of market collapse. So buckle up as we get into Warren Buffett's tips of how to profit from a crash. Before jumping into the main highlight of this video, let's start with the basics first. The stock market. A stock market crash occurs when the profits earned over the previous several years are lost due to a rapid drop in the markets. In a matter of weeks, days, hours, or even minutes, billions of dollars are lost, and the value of numerous stocks plummets to dangerously low levels. We already saw this kind of situation in 1929 during the Wall Street crash, the Nasdaq crash of 2000, the stock market crash of 2008, and of course the most recent one, the COVID-accelerated crash of 2020. You may be wondering, when will the next crash come and how long will it last? But here's the truth. We cannot predict what the exact date and time is of a market crash. Warren Buffett said never to try and time the market as it is unpredictable. So I'm not even going to try to figure out a date for that. The inflation in the US economy is at a 40-year high of 7%, far beyond the range that the Fed prefers to keep it at, and that it must be subdued at those levels. What will most likely happen is that Jerome Powell and his board of directors will raise interest rates. How? Here's the explanation for that. When the interest rates are low, it means borrowing money cost is also low, which implies that many people are encouraged to buy products with borrowed money because the cost is low. That's why there's a lot of economic activity when interest rates are low, as they've been in recent years. People tend to buy houses, vehicles, stocks, and other things because they can easily obtain loans at low interest rates. As you might expect, with so much money flowing around and with typically limited goods and services, the prices of goods and services rise, resulting in inflation. As a result, low interest rates tend to raise inflation, which is how we've arrived at the current state of affairs in the United States. In contrast, when inflation is as high as it is now, 7% is quite high for a country like United States. Raising interest rates slows down economic activity in a country because borrowing money becomes more expensive, resulting in a more balanced goods-to-price ratio and a lower rate of inflation. With current inflation rates, Powell and his board appear to be near certain to raise rates. This is bad news for the stock market since it means less new money will be flowing in and a lot of old money will be cashed out. The stock market's usual reaction is to drop, but in this situation, it's more likely to crash. Certain companies fell sharply in January following the announcement of a 7% inflation rate. Some meme stocks dropped by as much as 25% in a month. Whenever news of a hike is announced, we can expect something out of the ordinary. I'm going to share to you some of Warren Buffett's wisdom that will ensure you to continue making money even as the world around you burns down. Do you know that you're already ahead in the financial race? Yes, you are, because you're here viewing this video and you learn how to prepare for and benefit from a crash before it happens. That's the kind of mindset we should have. Battles are won before they begin, and in the case of a market meltdown, how you prepare in such a situation will decide your future path. Let's learn from the story of the many successes of Warren Buffett. He doesn't make money only by pure luck, but he studied to make money whenever the markets collapse. In the case of a stock market crisis, Buffett follows these 3 rules that keep him to gaining more profit. Despite the fact that they are relatively generalized, if you apply them carefully to your portfolio and your circumstance, you will be successful in weathering the storm. The first rule: be fearful when others are greedy, and greedy when others are fearful. When it comes to planning for a stock market crash, Warren Buffett's first rule is to be greedy when others are scared. When the stock market collapses, the majority of stocks plunge to the ground depending on the nature of the crash. Certain stocks may fall by as much as 30%. Some even fell significantly more. All this means for someone who is prepared is that you can obtain your preferred stock at a 20 to 30% discount. When others are expecting lows, you should be purchasing businesses that meet your criteria in investing. There's a basic piece of advice underlying the mantra of being scared when others are greedy and greedy when others are fearful. When everyone else is selling, buy at low prices by betting everything and hope for a long-term rise. When the dominant trend is bearish, good deals can be made. Obviously, putting this advice into practice is not for everyone. It takes good preparation and knowledge about financial markets, as well as knowledge of oneself to maintain control. More often than not, self-discipline that is developed prior to a crash is what can take you through. So in simpler terms, buy right in the middle of the crash when everything is at a bargain price. But make sure you've done some research about the companies you're buying so that you'll be set up for a lot of profit margins in the future. Looking at people who bought right in the middle of the 2020 stock market crash will show you how much money can be made in bad times. So do it, folks. Rule number 2 is to spend only and exclusively what you can lose. This is Warren Buffett's second piece of advice for preparing for a possible market crash. This is a general investment rule, but Warren Buffett claims that it's much more important to follow during a stock market crash. When people feel compelled to invest or see a once-in-a-lifetime opportunity, the impulse to borrow arises, and they buy stocks with borrowed money or money they can't afford to lose. For instance, their sole source of life savings. When a market catastrophe occurs, their entire lives are upheaved and put at risk. It's crazy in my view to borrow money on securities. It's insane to risk what you have and need for something you don't really need. You will not be way happier if you double your net worth. Warren Buffett says on the subject. But why does Buffett advise only spending what you know you can lose? This advice is particularly effective in the run-up to the market crisis when there is nothing ethical and a great deal of practicality. Debts made to invest must be repaid, and they must be returned fast. However, depending on the severity of the crash, it may take too long for the crisis to finish, causing the borrowed money to get trapped or worse, lose value. As a result, borrowing to invest is neither sensible nor wise. The second piece of Warren Buffett's advice is more about money security than money production. In any case, you'll have more money in your pocket. Consider this. If you borrowed money to invest in the Japanese stock market before it crashed in the early 1990s, you would still not have recovered your investment and would be saddled with a mountain of interest. Just don't invest more than you can afford to lose. And the last rule, rule number 3, trade knowing there will be a crash, but not knowing when it'll happen or how long it will last. Buffett's final piece of advice for preparing for and benefiting from a stock market crash is possibly the most significant. He claims that trading involves anticipating a crash but not knowing when it will occur or how long it'll last. To put it another way, it's important to understand that the market's bullish phase cannot go on forever, and that stock market falls are a natural part of the process. However, it is impossible to predict when they will arrive. If you are aware that a crash is imminent, you should manage your portfolio with extreme care. You could also build up cash reserves that you can use to purchase items. Buffett said that if you're going to do dumb things because your stock goes down, then you shouldn't own stock at all. Some people are not emotionally or psychologically ready to own stocks. But he believes that if you educate yourself on what you're really buying, which is a piece of a business, and the longer you hold stocks, the less risky they become. Whereas the longer the maturity of a bond, the riskier it becomes. People who are quick to react adversely do not benefit from market crashes, nor do those who are ill-prepared. Don't sell your stocks because of fear-mongering. Instead, follow the rules that Warren Buffett has been putting on to us for years. In the right circumstance, a market crash is not something to be afraid of, but rather something to look forward to, because you know it will leave your portfolio in a far better state than it was when it started. According to the Omaha Guru, the 3 rules I listed to follow before and during a market crash are essential to follow in order to win your way through a crash. Stock market crashes will always exist in the market, and they might be a profitable opportunity if you are well prepared for them. These are proven and tested strategies that have been seen in Warren Buffett's company, Berkshire Hathaway, through turbulent times. And it still stands as a strong empire decades later. So you already know what to do if there's going to be a severe market crash this year. If you follow those rules, not only will you survive it, but it will give you the opportunity to raise your net worth. So that's it for today. I hope you learned something from today's video, and to get updated with the next videos, don't forget to hit the notification bell. See you next time.